weakness, in particular in Canada, with the TSX underperforming. Given the tariff uncertainty, what does that mean for the broader Canadian stock market? Let's bring in a equity strategist who tracks the TSX closely for Bank of America Securities, Ohsung Kwon, with us. And Ohsung, you also track, obviously, the U.S., so you're equally watching what's happening in reaction to the tariff story with the S&P 500. How would you compare the two markets right now?
Yeah, first of all, thanks for having me today. Yeah, I mean, if you think about, excluding the tariff headline risks and all the noise around it, I think the macro cycle itself is still pretty favorable for equities in general. I don't think the economy is necessarily faltering to a recessionary levels. It's just that, we were in sort of a no landing narrative back in January, and now things are softening a little bit, whether it be because of the tariff risk, or things just slowing down because a lot of the temporary boost that we saw post-election and the pre-orders ahead of tariffs are waning. So I think the soft landing environment is going to continue in the market overall, which is going to be beneficial for the equity markets in general.
Interesting. Yeah, because there are a lot of people who are obviously worried about a recession risk, depending on how long this tariff fight continues. But you're saying that the market is working with what's in front of it. In other words, generally, globally, investors were somewhat constructive on the TSX?
Yeah, so for the TSX, I mean, obviously the biggest risk is if the tariffs that got imposed today are permanent. And we estimate that if this is actually permanent, then it could essentially wipe out the entire EPS growth that is expected for the TSX for this year, which is about 10%. So that's going to be very detrimental for the TSX, not only the TSX, but if this becomes more of a global trade war, then yeah, it's going to be very bad for the macro cycle and the equity markets in general. Our house view is that these are not permanent, especially on Canada and Mexico. And if that's the case, I think we could potentially see some relief rally. And what's also interesting is that for the TSX, our Canada cycle indicator, which is a quantitative indicator that has been very correlated to how the TSX performs versus the S&P 500, it just jumped to a two-year high. So, things are actually getting better fundamentally for the TSX. The rate differential is at the widest level versus the U.S. Earnings are getting better versus the U.S. So fundamental backdrop is actually getting better. Obviously, there is that tariff risk that's putting the overhang on the TSX.
And look, I'm not asking you to wear a political strategist hat, and even if you were, it'd be hard to know where the political story is going. But because you think that this isn't necessarily a permanent picture, this story that everybody's talking about today, why is it that you feel that way?
Yeah, I think it's the negotiating tool to review the USMCA and get some sort of a USMCA 2.0. What the U.S. wants to achieve is essentially reshoring, bringing back manufacturing to the U.S. Obviously, bringing everything back to the U.S. is going to be very difficult. I think it's going to be a North America story. And I think the setup is pretty interesting, that we have a very strong consumer base in the U.S., domestic economy in the U.S. We have commodities that we need in Canada and cheap labor in Mexico. So I think it's really going to be the North America story, those three countries working together to achieve reshoring. And I think that's the ultimate goal. And I think it's going to be pretty bullish for the three countries in general.
Interesting. Well, Ohsung, you're probably going to bring some calm to people who are feeling nervous today about the stock market from here. But in terms of the makeup of the TSX, I mean, we could talk about this for hours. Actually, one interesting side note, I don't want to get distracted here, though. There is a big component of the market weighting of the TSX that is a lot less about cross-border trade, a lot of services businesses that, they might get caught up in the emotion, but maybe less in the bottom line performance. But what are the components of the TSX that you think of, if this isn't a permanent problem, that are poised for some relative outperformance versus, say, the S&P 500?
Yeah, I think the fact that financials is a big chunk of the market in the TSX, especially versus the S&P 500, we like financials. Financials is our top sector pick for 2025, and I think there's a lot going for financials. Obviously, there's a lot of optimism that got priced in after the election in financials, but the two big bear cases that were in effect after the financial crisis on the banks, which are regulations, more regulations, and rates basically locked in at zero. Those two bear cases are gone. And with the yield curve steepening and rates basically remaining elevated, and we are still in an easing cycle. And yeah, the Fed might be done cutting, but rate pressure that really hurt the economy, especially in Canada, that pressure has waned quite substantially. So if that's the case, I think financials still looks pretty interesting, potentially benefiting from deregulation and rate environment that's still pretty healthy.
Okay, Ohsung, appreciate your breakdown on a day with a lot of moving parts. Ohsung Kwon joining us from the